Hello and welcome to this session on US GAAP ASC 842 compliance with the Crowe Lease Accounting Optimizer. My name is Brian Markgraf and I'm a consultant and lease accounting subject matter expert. Today we'll review example 25 in the ASC 842 examples, specifically variable lease payments dependent on an index or a rate. Let's get started. The lessee enters into a 10-year lease of a building with annual lease payments of $100,000, payable at the beginning of each year. The contract specified that lease payments for each year will increase on the basis of the increase in the Consumer Price Index, or CPI, for the preceding 12 months. The CPI at the commencement date is 125. There are no initial direct costs, and the incremental borrowing rate is 8%. The lease is classified as an operating lease. Given these facts, we have a payment schedule with annual payments of $100,000 and with a present value of future minimum lease payments at $724,689. $724,689 is also our beginning balance for our lease liability amortization schedule and the beginning balance for our asset depreciation schedule. As we continue on with the facts, at the end of the first year of the lease, the CPI jumps to 128. The lessee calculates the payment for the second year, adjusted to the CPI, to be $102,400, which is the original lease payment of $100,000 times 128, which is the current CPI, divided by the old CPI of 125. Because the lessee has not remeasured the lease liability for another reason, the lessee does not make an adjustment to the lease liability to reflect the CPI at the end of the reporting period. That is, the lease liability continues to reflect annual lease payments of $100,000. However, the year 2 payment amount of $102,400 will be recognized in profit or loss for year 2 of the lease. The payment schedule, as we see, is updated to reflect the new variable payments of $2,400. Note that the lease liability does not change as a result of the index revaluation. Unless there are other changes to the cash outflows associated with a lease, such as a lease extension or adjustments to the interest rate, the base payments and lease liability will stay the same. Please refer to our IFRS 16 video on index revaluations to compare how under IFRS 16 standards, the lease liability is adjusted for an index revaluation. With these schedules in mind, we will now go into the Crowe Lease Accounting Optimizer and view how the application quickly and accurately accounts for leases with payments dependent on an index rate. In our Dynamics 365 environment, we can navigate to our lease module, and the lease module appears as any other module in your environment. And to add our index rate, we can go to our setup, index rate type form, and we see that we have our index rate type setup form containing a list of the different index rates that we can tie to our lease. To add a new one, it's as simple as clicking on New, and we can input our CPI with the name of Consumer Price Index. To add the actual values of the index rates, we can click Index Rate and New, and we can assume that this lease starts on January 1st of 2017. And per the guidance, it states that the index rate at that time is 125. And then 1 year later, on 1/1/2018, the index rate is 128. When this looks okay, we can click Save. And then to add our lease, we can go to Common Lease Summary. And the lease summary shows a list of your portfolios for this specific company and pertinent information such as the lease description, the lease group, the status of the lease, and also the country and region. To add a lease, we can click on New. And a wizard pops up to allow us to add the important information to calculate the schedules for our lease. For lease description, we can type in ASC 842 example 25. For our lease classification, we have 3 different options: operating, finance, or automatic. If we chose automatic, the system would classify automatically the lease classification based on the information we provide. But for our case, according to the guidance, it states that this lease is an operating lease. So we can choose operating. The fair value of the asset for operating leases, the present value of future minimum lease payments must be under 90% of the fair value of the asset. So in that case, we can add a pretty large fair value. The guidance states that there's no implicit rate and the incremental borrowing rate is 8%. It is compounded annually and there are 10 payments of $100,000 annually. The lease term is 10 for 10 years, and the asset useful life we can say is 35 since it's a building. There's no transfer of ownership, it's not a unique asset, and we can choose a lease group of building from our dropdown. Next is annuity type. Since the payments are due at the beginning of each period, we will choose annuity due. However, if the payments were to be paid at the end of each period, it would be an ordinary annuity. The currency is USD, and this is a dropdown from our currency tables in Dynamics. And this is also and we can choose our vendor, which is a dropdown from the AP module listing all of our vendors. There's no initial direct cost, lease incentives, lease prepayments, or dismantling cost. And our commencement date, as we said before, is 1/1/2017. Next, let's head down to our index rate tab. And we have our index rate type, where we can specify which index is associated with the lease payments. And we'll choose CPI. The months between revaluation determines when this lease will be revalued based upon the index rate it is dependent on. According to the guidance, it is 12 months for this specific lease. Next, we will choose the index rate value at commencement date. This auto-populates with the date that we have inputted already in our index rate type setup of 125. This value can also be overridden, but for our case, we want it to be 125. Next is the manually revalue toggle button, which indicates whether this lease will be included in the calculations when the index revaluation process is run. If this field is set to yes, the user must manually adjust the lease to account for the change in the index rate. Next, we have allow decreases toggle button. If this toggle button is set to yes, then decreases in the CPI will affect the payments. If it is set to no, only increases. According to the guidance, it states that only increases in the CPI will affect the lease payments, so we will keep this to no. Next, we have our limit on rate increase. If the contract states that the payments cannot increase over a certain percentage, the user would enter that percentage as a whole number in this field. And finally, we have our index change to apply. In our case, 100% of the total change in the CPI is applied to the lease payments, so we will keep this field at 100%. We also provide a field where the user can copy and paste the index rate clause so that it gives the user and other users visibility into the specific clause in the lease that states that the payments are dependent on an index rate. Next, we can go down to our payment schedule lines and add our payment schedule. The lease commences at 1/1/2017 and ends 10 years later at 12/31/2026 with a payments amount of $100,000. And we see here that the index rate of 125 automatically populates based on the index rate field up above. And once we revalue the lease, we can see how this will change. So when everything looks okay, we can click Create Lease. And we have one more time to look it over before we create our schedules. To create our schedules, we can go to Function, Create Schedule. And we see an info log come up saying that our payment schedule has been created against this lease. To view the payment schedule, we can go to View, Payment Schedule. And we see our payment schedule has been created with annual payments due at the beginning of each period of $100,000. Giving us our total present value of future minimum lease payments at $724,688.79, which is the exact amount that we had in our presentation. When everything looks okay, we can click Confirm Schedule. And we see a few notifications coming up saying that our asset depreciation schedule has been created. To view those, we can click Out. And we can click View and view our lease liability amortization schedule. And we see that the beginning balance is at $724,000. And to view our asset depreciation schedule, we can also go to View and view our asset depreciation schedule with the same beginning balance of $724,688. When those schedules look okay, we can generate our initial recognition journal entry by clicking Function, Initial Recognition. And we see a notification saying that our journal number has been created against our lease. To view that newly created journal entry and to post it, we can go to Journals, General Journals. And the system has automatically created this initial recognition journal entry to debit our right of use asset by $724,688 and to credit our lease liability for the same amount. So by clicking post, this lease will now be in our books. Okay, great. Now the guidance states that 1 year passes and then the index is revalued. So to simulate 1 year passing, we can run our journal entries in batch, such as the payments, asset depreciation expense, and interest expense. To do that, it's very simple through the application. We can go to Common, Lease Journal Batch. And this way, we can run all of the monthly journal entries in one instead of having to click through each. So we will do our payment first from our commencement date, and then a year later, we can click to automatically post this journal entry. And we have several different sorting features, such as the lease ID or lease group. We will choose our lease ID from the dropdown. And we also have the option to run this in batch, but for our case today, we'll just run this once. So we can click OK and run it for our payments. And we have new messages saying that the operation was completed and the journal was posted. And now we can do the same with our interest. We can choose our liability schedule from the dropdown. 1 year later, at 12/31/2017, we can choose to post and choose our lease ID from the dropdown. Again, we see a notification that all of our journals have been posted, and we can do the exact same for our asset depreciation. Post, choose it from the dropdown. We also give the user the ability to post by a lease group, and we see our info log saying that the operation has been completed. Now we can go back to the lease summary and view the transactions against that lease. So we can select our lease and go to our liability transactions table. And now we see here that the lease liability was initially recognized at $724,688. There's a lease payment, which decreased that liability. And then there were 12 months of lease interest expense accrued, which increases the lease liability, giving us our carrying amount of our lease liability at $674,663. Next, we can head to our asset transactions table. And we see the initial recognition amount of $724,688, and then 12 months of ROU depreciation expense, giving us a right of use asset balance of $674,663. Well, that looks okay. We can click out. Now, after we've simulated that year, we can go to periodic and go to index rate revaluation and show you how the system automatically can revalue the lease variable payments based on that index rate. So this opens up the index rate revaluation form, which shows the different times the index rate revaluation has run, including the process date, the legal entity for which it was run, the amount of leases adjusted, the liability that it was adjusted during that process. And again, the liability isn't adjusted during index revaluations under US GAAP unless there is another change in the facts, such as a change in the interest rate or a change in the lease term. Next, we have the variable payment column, and this shows you the total amount of variable payments that were adjusted. So to run the revaluation process, we can click Lease Index Revaluation. We can filter for which records to include, and we can choose to filter by our lease ID. But the system also gives you many different criteria to search for and to filter to revalue only leases in a certain lease group or with a certain lease description. So with our criteria, we will choose our lease, which is the last. We can click OK, and we can click OK. We see here that our lease 1118 is an operating lease. It has no asset or liability adjustment. However, the variable payments will be adjusted by $21,600. Now, nothing has been posted yet. This is a preview page, and when everything looks okay, we can click OK. And we'll see here that our operation has been complete, and we can go into our payment schedule for that lease and view that the variable payments have been updated. So going into our lease, we can click on View, Payment Schedule. And we see that after the first year, the variable payment column has been updated to account for that extra $2,400 of variable payment. And please note that the payment amount does not change from the original $100,000 because there's been no other changes to the lease other than the change in the variable payments. So the variable payment column is the only thing that will be updated. And we see that it extends for the entirety of the lease. And so to make a payment and to see how this journal entry is created, we can choose this period, click Create Invoice. And we see that an invoice journal has been created against this lease. We can close out of this, go to Journals, Invoice Journals. And we see that our operating lease payment is debited for $100,000. Our vendor payable for our operating lease payment is $102,400. And then we also debit our operating lease variable payment. And this account is set up by the user in the setup form. And when everything looks okay, we can go ahead and click Post. And we have posted that journal entry. And we can go to our liability transactions and view that only the $100,000 has affected the lease liability. And there you see the lease payment for $100,000 decreasing our lease liability. We hope that you've enjoyed this session and found it useful. Please reach out for any comments or if you would like to schedule a demo. Thank you.